In the world of cryptocurrency, Bitcoin has always been a frontrunner and a center of attention for investors and enthusiasts alike. Over the years, Bitcoin has witnessed significant price fluctuations, capturing the interest of both skeptics and believers. With its recent surge and unprecedented growth, many are now speculating about the possibility of Bitcoin reaching the remarkable milestone of $200,000. There's reason to be optimistic about Bitcoin, and the world's biggest crypto token could climb to over $200,000 in the next few years, Fundstrat head of research Tom Lee told CNBC on Monday. Commenting on Cathie Wood's hugely bullish outlook for the coin, the ARK Invest CEO holds a $1 million target for Bitcoin. He said that her rationale isn't misguided. I think her idea of network value for Bitcoin and scarcity still argues that, if this isn't an upcycle, her numbers are correct, something in the $200,000 plus range, he said. In this article, we will examine the factors contributing to Bitcoin's current upward trajectory and explore the arguments for and against this optimistic projection. Bitcoin, often referred to as digital gold, has experienced a remarkable journey since its inception over a decade ago. Initially, it gained attention as an alternative currency with its decentralized nature and ability to bypass traditional financial intermediaries. As more individuals and institutions began to recognize its potential, Bitcoin gradually garnered mainstream recognition, attracting both retail and institutional investors. In recent years, Bitcoin has witnessed unprecedented growth, breaking multiple price records along the way. The surge in institutional adoption, increased investor confidence, and the recognition of Bitcoin as a store of value have all contributed to its upward trajectory. Additionally, global economic uncertainty, inflation concerns, and low interest rate environments have pushed investors towards alternative assets, including cryptocurrencies like Bitcoin. The Securities and Exchange Commission this month took legal action against crypto exchanges Coinbase and Binance, asserting that the firms are offering unregistered securities to their customers and are operating illegally in the U.S. While the SEC's moves could be a headwind for many tokens, it'll actually be a boost for Bitcoin. The crackdown has had a limited impact on the token's price, which already bottomed out at around $25,000, according to Lee. First of all, the institutional adoption is one of the macro factors driving Bitcoin's price. Institutions, such as major banks, asset management firms, and corporations, have shown growing interest in Bitcoin. Notable players like Tesla, Square, and MicroStrategy have allocated substantial investments to Bitcoin, adding credibility and fueling the cryptocurrency's value. Continued institutional adoption could drive significant price appreciation. For example, BlackRock, the renowned global asset management firm, has made a significant splash in the world of cryptocurrencies with its recent filing for a Bitcoin exchange-traded fund, ETF. This move marks a notable shift in BlackRock's stance towards Bitcoin, considering the previous rejections faced by similar ETF proposals from other firms. The filing of a Bitcoin ETF by BlackRock holds tremendous potential for the cryptocurrency market. As the world's largest asset manager, BlackRock's involvement lends substantial credibility and validation to Bitcoin as an investment asset. With the Securities and Exchange Commission, SEC, previously rejecting several Bitcoin ETF proposals, BlackRock's entry into the space could potentially pave the way for greater regulatory acceptance and mainstream adoption. Let's talk also about the limited supply. Bitcoin's scarcity is a fundamental aspect that contributes to its value. With a fixed supply of 21 million coins, the demand for Bitcoin has the potential to push prices higher as more investors seek to acquire a piece of the limited supply. As the Bitcoin mining rewards decrease over time, scarcity is expected to drive up its value. We can mention also the global economic uncertainty. The ongoing economic uncertainties caused by geopolitical tensions, fiscal policies, and the COVID-19 pandemic have led investors to seek alternative investment options. Bitcoin, often viewed as a hedge against inflation and economic instability, has attracted investors looking to diversify their portfolios and protect their wealth. Finally, increasing retail adoption is the last factor that could send Bitcoin to new time high. The growing acceptance and integration of Bitcoin in various sectors, including e-commerce, payment processors, and online platforms, have facilitated greater retail adoption. As more individuals become comfortable with using and investing in Bitcoin, the demand for the cryptocurrency is likely to surge, potentially driving its price to new heights. While the prospect of Bitcoin reaching $200,000 is met with excitement by many, it is essential to consider potential counterarguments and risks. Critics point to the inherent volatility of Bitcoin, regulatory uncertainties, and the possibility of increased government scrutiny as factors that could hinder its growth. Additionally, market manipulation, technological challenges, and competing cryptocurrencies could impact Bitcoin's long-term trajectory. The possibility of Bitcoin reaching $200,000 is both captivating and speculative. While Bitcoin's recent performance and market dynamics suggest potential for further growth, it is crucial to approach such projections with caution. The cryptocurrency market remains highly volatile and unpredictable, subject to various external factors. As with any investment, individuals should conduct thorough research, understand the risks involved, and consult with financial professionals before making investment decisions. Bitcoin's journey to $200,000 may be an ambitious goal, but its ongoing evolution and increasing mainstream acceptance make it an asset worth monitoring closely in the coming years.